Jeff Bezos selling part of his Amazon stock for the first time in more than 2 years.
Billionaires are running from America's economy, and they're not looking back. In just months, Jeff Bezos sold nearly $6 billion in Amazon stock. Warren Buffett hoarded a record $177 billion in cash, and Saudi Arabia walked away from the petrodollar deal after 50 years. With Trump's new tariffs hitting on August 1st, the dollar is cracking, U.S. allies are rebelling, and the richest Americans are quietly cashing out. Across America's financial elite, the sell-off has already begun. Jeff Bezos, the founder of Amazon, has sold almost $5.7 billion of his company's stock between late June and July 2025, including $735 million on his wedding day. These sales are his biggest in years, and they came quickly, just weeks after public clashes with Trump's trade policies. Warren Buffett, the man famous for saying never bet against America, is quietly doing the opposite. Berkshire Hathaway's cash pile hit $347.7 billion in the first quarter of 2025, the highest in its history. Instead of buying U.S. stocks, he's been selling them, moving into short-term government debt and holding cash. Ray Dalio, one of the most respected hedge fund managers alive, has been shifting money away from American tech and healthcare, warning in July 2025 that the U.S. faces something worse than a recession. Elon Musk, running companies that depend on global supply chains, predicts a recession in the second half of 2025 due to Trump's aggressive new tariffs. Stanley Druckenmiller, another billionaire investor, has taken short positions on U.S. Treasury bonds, reflecting deep skepticism of the bond market and the dollar. These are not random moves. They are coordinated in one way. The richest, most informed people are quietly moving their wealth away from U.S. assets before the storm hits. And while the public hears optimism from Washington, the billionaires' actions tell a much darker story. On August 1st, 2025, Trump's new tariff package hit like a hammer, reimposing and expanding tariffs affecting over 90 countries, with a 30% duty on Chinese imports and steep new rates on steel, aluminum, autos, semiconductors, and more. The White House pitched it as protecting American jobs, but markets reacted sharply, and global partners pushed back. EU trade ministers called it absolutely unacceptable and prepared countermeasures worth 72 billion euros, though they delayed enforcement to negotiate. In private, EU officials warned this trade strategy felt like blackmail. Trump didn't stop there. He threatened even higher tariffs on any nation daring to settle trade in currencies other than the US dollar. History offers a warning. The Smoot-Hawley Tariff Act of 1930 triggered global retaliation and helped deepen the Great Depression, with trade plunging by over 65%. Now, many analysts fear we could be repeating the same disastrous chapter. Instead of strengthening America, these tariffs may be accelerating its economic unraveling, and elite investors seem to understand the danger clearly. For decades, the U.S. dollar has been the world's most powerful currency, used in oil deals, global trade, and as the main reserve for central banks. But in June 2025, that grip began to loosen. Saudi Arabia allowed its 50-year petrodollar understanding with Washington to quietly expire, opening the door to sell oil to China in yuan. This was a direct signal that even America's longtime energy partners are ready to move away from the dollar. At the same time, the BRICS alliance, led by China, Russia, India, Brazil, and South America, has accelerated talks for a shared settlement currency to rival the dollar in global trade. IMF data from June 2025 showed the dollar's share of global reserves falling to 57%, the lowest in history. Across Latin America, countries like Argentina and Brazil are settling more imports from China in yuan. In Africa, Kenya and Nigeria have signed deals to pay for fuel and infrastructure projects in UAE dirhams and Chinese currency. These moves are not symbolic. They reduce demand for dollars in global markets. Economists warn that as few countries need the dollar, America's ability to finance its massive debt will weaken. Using the dollar as a political weapon through sanctions and tariffs has only sped up this shift. And while Washington talks tough, the world's biggest economies are building ways to bypass the U.S. financial system entirely. This is how reserve currency dominance fades, not in one big collapse, but through hundreds of small, irreversible steps. America's biggest companies are not waiting for Washington to fix the economy. They are moving where the growth is. In 2025, Apple announced a $3 billion investment to expand manufacturing in India, building new factories and creating over 200,000 jobs abroad. In China, Apple's sales remain strong, and it's expanding suppliers in Vietnam and Malaysia. Tesla is expanding its massive Shanghai plant to boost EV output. Its gigafactory is nearing 750,000 units per year and is building a battery megafactory for energy storage in Shanghai with a $557 million grid-scale project. Starbucks is pushing growth in Asia. Its India joint venture aims for 1,000 stores by 2028 under Tata Starbucks, and it now operates nearly 7,000 stores in China. ExxonMobil has committed $10 billion to a petrochemical complex in Huizhou, China, which began test runs in early 2025. These are not small moves. They show that the real money is chasing Asia's 3.5 billion customers, not America's saturated market of 330 million. CEOs know where the future is, and they are investing in regions with rising middle classes, growing economies, and governments eager for business. Every new plant, store, and deal outside the U.S. is another sign that corporate America is preparing for a world where the U.S. is no longer the center of global growth. The United States is sinking deeper into debt, and there is no clear way out. As of August 2025, the national debt has passed $37 trillion, the highest in history. The U.S. Treasury's latest data shows interest payments on this debt are now close to $1 trillion a year. The cost of serving the debt has jumped more than 40% compared to last year, driven by higher interest rates and relentless borrowing. In July 2025 alone, the government announced plans to borrow another $1 trillion just to keep basic operations running and cover its budget deficit. Credit rating agencies have already warned that America could face another downgrade if it fails to control its spending. The problem is simple. As debt grows, interest payments grow even faster, eating up more of the federal budget. This leaves less money for investments that could grow the economy. Economists warn that if the U.S. keeps spending this way, it will soon be borrowing just to pay interest, a dangerous cycle that traps countries in financial decline. And with the dollar facing global challenges, America's ability to keep financing this debt at low cost is fading fast. This is why many of the world's richest investors are calling it a fiscal time bomb. Billionaires are not acting on rumors, they're following a clear pattern. They're selling U.S. stocks and moving into cash, short-term bonds, and hard assets like gold, lithium, farmland, and energy. They're shifting investments to Asia, where consumer growth is booming and governments welcome foreign capital, with foreign inflows hitting $25.7 billion into Taiwan and South Korea in July 2025 alone. They're also diversifying away from the U.S. dollar, moving into Bitcoin, gold, and Chinese assets. These are strategic moves from people who've predicted past crashes, and they signal that a mix of rising debt, a weakening dollar, and global power shifts could hit the U.S. economy hard. For ordinary Americans, ignoring these signs could be costly. The richest Americans aren't waiting for the crash. They've already begun pulling their wealth out of risky U.S. assets, moving billions overseas, buying hard assets like gold, energy, and farmland, and securing positions in booming Asian markets. These moves aren't random. They're calculated steps from people with the best information and the most to lose. While Washington tells the public the economy is strong, these elites are building firewalls to protect themselves from the storm they see coming. Subscribe now to stay ahead. Follow every strategic moves the billionaires make and uncover the truths that politicians and the media won't say out loud, before the quiet warnings turn into a financial earthquake that shatters everything you've worked for.